Okay, so real quick, there's no brand deal running in the background, no referral link I'm quietly getting paid on, none of that. It's about years of hands-on work inside crypto infrastructure, and the last chunk of that time has been specifically dedicated to pulling apart AI trading systems and figuring out which ones are actually engineered to work versus which ones are just engineered to look like they work. That distinction sounds simple, but in practice, it takes a lot of work to establish clearly. All right, let's move. Platform's running right now, and before the first trade even fires, gonna walk through every configuration field because the setup phase is underrated as a signal. A lot can be read from how a system asks to be configured. I press Start Bot here. Okay, it's in. First thing showing up is Asset Pair, and the dropdown here is pretty extensive. Reason for that is the engine is simultaneously monitoring 16 plus exchanges at once, so the available assets just naturally reflect that whole network. Going with Ethereum, it's got solid price variance across exchanges, and the liquidity profile works well for what's being demonstrated here. All right, then I switch to live mode, and wallet address field appears right underneath. Good. Moving down to position size. This is just the capital being allocated to this session, nothing complicated. Locking that in. Okay, and directly below that is risk tolerance. And this one actually gets misunderstood pretty consistently, so I want to be precise about it. This parameter is controlling the threshold for trade confirmation. It's defining how much spread ambiguity the algorithm will accept before it decides a setup isn't clean enough to execute. I prefer to keep it conservative. The trade count will be lower, but the quality will be higher. Okay, last field is execution model, which is essentially the strategic rule set the algorithm is operating under, the specific methodology it's applying when it's combing through exchanges hunting for price gaps that are worth taking. Okay, scanning back through the full config. Yeah, everything's where it should be. Proceeding. Deposit screen is up, have a couple of different assets sitting available. No manual conversion needed on my end. The platform's backend handles that internally before anything activates. Okay, then I press confirm, and we're running. Dashboard is live, positions opening, accuracy rate climbing, spread column updating, chart moving in real time underneath everything. The UI is genuinely cleaner than most things at this tier, for what it's worth. Session wrapped, I press stop and withdraw. Done. And this results page is showing the full picture. Session length, number of executions, active model, accuracy rate, and then the return figure at the bottom, net of the platform's cut. Everything's in one place. Here I tap withdraw and wait on the confirmation, usually a few minutes to land. So want to actually use this window to talk about more foundational before getting into takeaways. So worth breaking down what's mechanically happening inside this thing, because most people watching a demo like this don't stop to ask whether the underlying structure even makes logical sense, and it's worth asking. Any major asset, ETH, BNB, whatever, is trading simultaneously across dozens of separate exchanges, and because each exchange is its own independent ecosystem, the price of that asset is almost never pixel-perfect identical across all of them at the same moment. Small gaps are always present somewhere. That gap is technically a profit opportunity, but it exists in an extremely short window before the broader market mechanically corrects it. The time frame we're talking about is sub-second. By the time a person even registers that a gap exists, the correction has already happened. That's not a minor obstacle, that's the entire problem this technology is built around solving. The value isn't in identifying the gap, that's honestly the more accessible part of it. The value is in closing both legs of the trade fast enough that the spread is still open when execution happens. The algorithm doesn't weigh it, doesn't hesitate. Both sides execute the instant the parameters are hit, and running that process simultaneously is what translates an edge that exists in theory into one that actually shows up in results. And so to be concrete about where things stand with what was just shown, been running this platform for roughly 5 months, somewhere around 42 sessions at this point, with intentionally randomized configuration and position size each time, specifically varying them to find out whether results degrade. They haven't degraded. Withdrawals have processed cleanly every single time. The numbers have been internally consistent across the entire testing range. Nothing is surfaced that revised the initial read. And that's what an actual evaluation process produces, not a single well-timed recording. That's genuinely the only data point worth making a decision on. Thanks for being here.